All right, good morning, ladies and gentlemen. Thank you all for joining us today. I'm grateful to the UNCDF team for putting together this panel and inviting me to moderate this very important discussion. Now, the nature of work has been steadily changing, giving a rise to the gig economy, with stats from World Bank stating in 2018 that nearly a quarter of Malaysian workforce are either freelancers or gig workers. While the trend has been steadily on the rise for years now, the pandemic has pushed many to turn into the gig economy as a source of income. Now, given the rising importance of this, we find ourselves increasingly asking whether or not a financial system that's designed for the old economy is well suited for the gig economy. Today's session will feature a research presentation from UNCDF, followed by a panel discussion exploring how we can better address this issue. The research presentation will be done by Hui Ming, who is the data scientist with UNCDF. And in the panel, we'll be joined by Farhan Hizami, who is the Inter-Ministry Collaboration Manager in MDEC. He's on top of the camera over there. And then below him, we have Audrey Misquith, who is the Data and Insights Lead for UNCDF. Data and Insights Lead on Financial Health for UNCDF. And then after that, we have Nurhisham Hussein, who is the Chief Strategy Officer for EPF. And on the bottom of the screen there, we have Sean Goh, who is the Managing Director for Grab Malaysia. Now, to set the context, I'd like to invite Hui Ming to share their latest findings with us. Hui Ming, you have the floor. So, Hui Ming, your screen is already showing, so you can begin the presentation whenever you're ready. Hui Ming? Yes, we can hear you now. Can you start again?
All right. Good morning, everyone. So this will just be a quick presentation of a research that UNCDF have done in partnerships with a number of gig work platforms in Malaysia over the period from March 2020 to August 2020. So the research is basically to understand the financial lives and aspirations of gig workers in Malaysia. So what we are trying to understand is why do people choose gig economy? How have their experience been? How do they fare on financial health metrics, and what are their financial behaviors, and what are the type of financial products they use, and especially as we are facing the impact of COVID-19, how has that impacted their financials? Conditions, and how are they coping with that? So we partnered with GoGet, Fast Jobs, Foodpanda, and Grab over the half a year period from March to August. So GoGet, Foodpanda, and Grab are strictly gig platforms. Fast Jobs is actually a platform that also facilitates a long-term and traditional employment as well. But we have samples of both gig workers and non-gig workers on the sample. So for these presentations, we'll be focusing on findings from Foodpanda and Grab, because they are all both launched and run over the same period, and also they have one of the biggest samples among all. But for all surveys, the findings have roughly be about the same. So by looking at Foodpanda and Grab, we should be able to understand how the other gig workers on the other platforms are doing. So this will just be a highlights of some of the findings. So the first is why do people choose flexible employments or gig economy? So we see that most of them actually choose that because of flexible work hours. Then they have this control or autonomy over when they want to work, who they want to work for. And then also this additional income to supplement their incomes, and also extra income for saving. So if you look at these top reasons for choosing gig economy, most of them, they choose this by choice rather than necessity. So it is basically they like this over the traditional employment. But we do not hear that. We have 14% of the samples who are respondents who actually says that they join gig economy because they can't find traditional jobs. And this percentage has actually been increasing over the last few months because of COVID-19. So we see people from the aviation industry, tourism industry actually joining the gig economy because they couldn't actually, they got retrenched or they couldn't find jobs. And we also see that in the comments, a lot of them mentioned that they have special needs children or family members, or because of their old age, they couldn't find other jobs. That's why they join gig economy. But largely, most of them are joining by choice rather than necessity. And when we ask them what are the major concerns about being part of this gig economy, we see that close to half of them choose income uncertainty as the top concern. We do have a smaller percentage here who are concerned about the lack of benefits, which is usually quite standards in the traditional employments like pensions, healthcare, insurance. But for most of them, income would come first. So only after they have a stable income, they would actually want to think about benefits. So that comes second. And we do have others who actually are worried about things like competitions, lack of time with family and all, but that is just a minority of the respondents. The second part is actually looking at their financial behaviors and how do they fare on financial health metrics. So we look at this by looking at whether they are able to pay their bills and credit cards. So this will be in terms of whether they can meet their daily commitments, whether they are able to deal with 100 ringgit emergencies, should there be any emergency. And we see that more than half of the samples are actually quite comfortable. I mean, they are able to meet their daily commitments. But when it comes to dealing with 1,000 ringgit financial emergencies, actually a third of them will not be able to do so, and about half of them will find it difficult. So we see quite contrasting findings here. And when we go further to look at, say, whether they worry about their finances, whether they feel like they are in control of their finances, and the last part, when it comes to financial freedom, whether the income allows them to do things they enjoy, more than half is actually saying that they do not actually feel in control. They do not have yet to attain this financial freedom. And when we run some machine learning modelings to see what are the factors that really determine how they are faring on all these metrics, we see that for different metrics the significant predictors are different. But what consistent findings that we see is that frequent savings and financial plannings, they are significant predictors on all these metrics. And we think this will be something that we would like to highlight in our discussion later as well. So the next part is actually focusing on whether they have borrowed in the past 12 months, and if they do, where did they borrow that money from, and what did they borrow the money for. So we see that 3/4 of them actually borrow from non-formal sources, so that will be borrowing from family and friends, and only about 1/4 had borrowed from formal institutions like banks or other financial institutions. And when they borrow, when we ask them the reasons why they borrow money for, most of them are actually for essential expenses and emergency expenses. So things like borrowing to build business, or even for educational fees, purchase of house or other assets. That is only a small portions of those who ever borrow. So that actually indicates that a lot of these gig workers they lack cash in hand. But again, we would like to note that this is actually not unique to the gig workers. We do see this kind of findings and trends with other surveys that have been done by, say, Bank Negara and other financial agencies in Malaysia, that this is a findings that we generally see among the Malaysian population as well. Okay, so next, when we try to study like what are the financial products that they use, we see that savings accounts are rather ubiquitous. So about like 80 to 90% across all education level and income levels, they do have a savings account. But when it comes to other more sophisticated products like, say, e-wallets, insurance, or investment products, that is only like less than half of the respondents or gig workers that are in our sample. And when we try to study the trends or the compare the usage across different education level or income level, we see that it generally follow the gradients of education level. So, for example, if we move from, say, lower secondary education to those who had upper secondary education, and then to pre-university, vocational training, even tertiary education, you can see that the charts, the percentage is higher as you move up the educational level gradient. And you will actually observe the same findings as well when it comes to income level. And we can see that the disparity is actually quite big when it comes to income level. So when you look at, for example, insurance, credit card, investment products, those who earn more than 60,000 a year like the percentage of them using or these products are more than double than those who earn less than 12,000 a year. And the last part is actually looking at how has this COVID-19 impacted them and how they are dealing with it and what do they plan to do after this to better cope with similar impacts in the future. So in our surveys, about 60% of respondents actually say that in COVID-19 pandemic has actually caused significant reductions in their income over the past few months, and most of them to deal with to cope with these changes have actually tapped into their savings here, and then they also try to cut down their essential and non-essential expenses. So and we also see that some of them have actually borrowed money from either their friends or families, from gold shops or money lenders, and there are some also who have actually received aid from the government, and this is mainly in the under the Bantuan Prihatin Nasional (BPN) scheme. And also some have also received help from NGOs. And when they look at like what financial changes they would like to make after this to better deal with similar impacts in the future, or most of them, about 2/3 of them have indicated that they would actually plan to take on more jobs or more business to increase their income. But the positive findings from here is that a lot of them are also planning to adopt healthier financial behaviors, like to plan their finances better, to spend within their means, and also to put aside more money in savings. So these are encouraging findings we see. And again, we want to highlight that this impact of COVID-19 on the gig workers is actually not unique to the gig economy populations, but it applies largely to the Malaysian population as well. It's just that for this research that we are doing, we are actually focusing on these populations, but the findings are not unique to that population. And that concludes the short presentations. Thank you, everyone.
Thank you, Hizami. That was a good presentation to actually really set the context in terms of where we stand for gig worker, what are the motivations, and what are their current circumstances. Now, there are some of you who are just tuning in, and for those of you who are just tuning in, that was previously the presentation from UNCDF on their research on gig economy, which we will make available after this webinar. If you have already registered, we can later send you a copy once the research is properly published. You can also send us an email at editorial@fintechnews.my, and we can send you a copy as well. Now, once again, we are joined by Farhan Hizami, who is the Inter-Ministry Manager for MDEC, Audrey Misquith from UNCDF, Nurhisham Hussein from EPF, and Sean Goh from Grab Malaysia. Gentlemen and lady, thank you for joining us. Glad to have you guys on the show. Now, to begin, just based off on what Hizami was presenting earlier, it does seem that gig economy is on the rise, especially during this pandemic. So with that in mind, my first question is whether or not we as an industry are doing enough in building products and services towards the financial well-being of these gig economy workers. So maybe we can start with Farhan, who's right on top, and then Audrey, then Nurhisham, and then Sean. Farhan, you have the floor.
Okay, thank you, Vincent. I think with regard to the financial product and services, recently we have seen, especially in MDEC, under our sharing economy and gig economy programs. So we have more than 120 platforms, gig platforms under our purview. So we have seen there are more and more products and services, financial services, coming to the market. And we at MDEC, we have been working closely with the private and also public institutions similar to EPF and also SOCSO. Private institution, of course, the public private insurance providers. But I think we have more to be done, since I think the implementation of the gig economy model itself, I think we have seen throughout the years. Currently, I can say there are about 16 sectors under our purview. But under each sectors, there are about 2 or 3 more activities which are unique, and each of these activities or jobs or tasks will require different needs and also coverage. So in terms of the variation of products can be very I think on one side, of course, if you're talking about insurance coverage, currently we have some providers who cover the workers. But at the same time, if you're talking about the sharing economy or gig economy, you need to have also products to cover the assets of the gig workers. So, talking about the motorcycles, the car, the houses. So that one, I think we have more to be done in terms of financial services based on investment. I think there are already a few solutions in the market which can automatically deduct their income, monthly savings. So, but again, it's quite limited in terms of the choice of the service providers. And I'm not sure, but of course, we need to think also about one of financial product. I think that is highly requested by the workers in terms of the microfinancing and the microcredits, especially by the gig workers. So there are initiatives by Tekun, for example, for these gig workers to purchase and also to repair their motorcycles. So up to 10,000 ringgit, basically for them to enable them to earn income. So basically to work on the gig platform, so they require a motorcycle. So, but again, it's quite limited in terms of the products offered to the gig workers. So there are a lot more to be done. But I think the main challenges here is in terms of the data. So again, the service provider will require a strong data so that they will be able to understand in terms of the potential of the market, in terms of the size of the gig workers in Malaysia, so that they can tally and also to innovate more in terms of the products. So yeah, probably that's from me.
Thank you for that, Farhan. So I guess it's also important to set the context, to frame it in a sense that gig workers are not just your Grab drivers or your Foodpanda deliverers, but also it's a wide range of different kind of professions, from designers to coders, each with very different economic profile and each with very different needs as well, right? So let's move on to exactly, yeah. Let's move on to Audrey, and maybe Audrey, you can share with us what your views are on whether or not the industry is doing enough for the gig economy workers. Audrey, you have the floor.
Thank you, Vincent, and I'm really honored to be here with all these other guests to discuss this important topic. So thank you again. In terms of the question, I do think that the financial sector is waking up to the reality of the gig economy and its impending growth. And there's a lot being done by the sector. As Farhan rightly mentioned, there are many products and services that are being offered to the gig worker segment. But what we see is that this change is being led mostly by financial technology companies or fintechs, notably startups, and gig platforms themselves. But with respect to incumbents or traditional financial institutions, I don't think there's a lot of traction, and I think more can be done. There's two specific points that I'd like to make in relation to what the financial sector as a whole can do to improve the financial well-being of the gig worker segment. And the first thing is to take a good hard look at some of the core assumptions that underlie the financial ecosystem, right? And this applies to the entire financial sector. So there are certain rules of thumb by which the financial sector operates, particularly financial institutions. So let's say I want a loan and I go to a bank. What is the bank going to want to do? They want to assess my risk profile. They want to know if I'm able to repay this loan or not. And how are they going to assess that? They want a set of documentation which can demonstrate that I have a steady source of income, an X amount that's coming into my account on the 25th or the 30th of every month. Now, if I'm a gig worker, that's a pretty dicey situation, because either I don't get a monthly income, I probably get daily income if I'm in the e-hailing industry, for example, or I'm getting income from different sources, and it's not just a salaried, a certain salary coming into my account every month. So the point there that I'm trying to make is that the rules of thumb that the financial sector operates by is very amenable to the traditional labor economy, to traditional employer-employee relationships. Or in other words, it's built around the notion of a salaried worker. So if you want to serve the gig worker segment, you have to change these rules of thumb. You can't apply the same rules that you apply to a salaried worker to the gig worker segment. And the financial sector is realizing that the future of work is going to be very different. People are not going to receive an amount every month. They might receive income from different sources, but they're not really changing the way they operate. And I think that's the first thing that needs to be done. The second thing that needs to be done is once you establish that you need a certain set of rules for the gig worker segment, the next danger that you must avoid is, Vincent, as you rightly pointed out, to not look at the gig worker segment as a homogeneous segment. Yes, gig workers can be defined by a few ground rules, such as their work is probably temporary in nature. They perform gigs, which are sometimes over in a matter of minutes, and there's a string of gigs that they can perform. They don't necessarily have traditional formal employment contracts, but that does not mean that the segment is very similar. So one gig worker can be different from the other. In our research that Hui Ming just presented, we didn't have a lot of time to go into the details, but one of the things that came up in our research was that there are many distinct archetypes of gig workers. For example, in our e-hailing and food delivery sample, we saw that the 15 to 24-year-old gig worker segment is pretty distinct. They choose the gig economy, obviously, because of flexibility, but also because they want to make additional income. And this ties into certain specific financial goals they have, such as this segment wants to save for their wedding, or they want to save to purchase a car. These are their specific financial goals. They also tend to use e-wallets more so than the rest of the sample, people from other age groups. So the point here is that there are segments within the gig worker segment that behave very differently from the rest of the group. So if the financial sector is going to use a cookie cutter approach and just thrust many products and services down on the gig worker segment and then wonder why there's no uptake, this could be the reason. And customer segmentation is something that applies more broadly and not just to the gig worker segment, but because because the gig economy, it's not exactly a new concept, but there is still limited understanding of how it's working and how it's progressing. We must avoid the danger of regarding this group as one similar group. So 2 points. One, you change the rules of thumb when you're looking at the segment, and two, understand that this segment is not a homogeneous group.
Thank you. That's very good insights, not homogeneous, and also change the rule of thumb. I think, for some bankers who's been a career banker, when they think about the word gig back then was really musicians and buskers, right? So it's kind of different these days. So we really need to think about how do we redesign that. And next, maybe we can get some thoughts from Nurhisham. And I think it's particularly important because EPF is a very big pillar for most Malaysians when it comes to planning for the retirement and saving for the retirement. So maybe, Nurhisham, you can share with us, whether or not the industry is doing enough to cater to this category of workers. You have the floor.
Okay, thank you, Vincent, and thank you to UNCDF for inviting me. I think I'm going to echo quite a few of the points that both Audrey and Farhan raised. I think it's important to realize that we could look at the gig economy, but it is very heterogeneous. There are various, I think, different motivations for being in the gig economy, and the circumstances are going to be radically different. So you can't take a one-size-fits-all approach. What we can do is actually look at from, I think, really looking at the pain points that people in the gig economy are really facing, and try to address those rather than, use the traditional kind of approach of saying, okay, this is this kind of demographic, and they behave this kind of way. I think there's going to be differences even within particular age brackets, whether you're talking about Gen Y, Gen Z, or what have you. Also, I'd like to raise the point that really what we think of as a traditional type of job is really not traditional at all. It's really only a factor of the Industrial Revolution, and it's only been really prevalent over the last 200 years or so. And when we think of the Office 95 type of job, really what we're talking about is post-World War II. So it's only something that's come up over the last, I think, 70 years or so. And even in Malaysia, it's never been a majority of the work. And when we talk about the gig economy, it has to be in the context of a much larger informal economy. So even though EPF has been a big factor for a lot of Malaysia, it's never been a majority. Right now, we're only covering less than half of the labor force and less than 40% of Malaysian adults. And the proportion has been steadily dropping over the last 20 years. So, we are, the EPF is really looking at, okay, how do we maintain our relevance given that, the world of work is changing, the economies are changing, structural of the economies are changing, and when we talk about gig, that's going to be the type of work of the future. You're going to have people with very radically different circumstances. They're not going to have steady income streams. They're not going to be able to save regularly. You're not going to be able to have mandatory contributions when nobody's actually earning a regular paycheck. So to the question of whether the financial industry is offering enough, obviously not. Really, it has to go back to really focusing on how different those differences between the normal salary worker versus a gig worker, and really trying to address those. So some of the ways that we've been trying to approach it, one, you're really looking at the circumstances that gig workers actually face. One is obviously the uncertainty of income and the volatility of income. You're not going to be able to save regularly on that basis. It's going to be on an as is, when is basis. We're used to the idea of e-hailing. You got a lot of multiple jobs on a given day, so you can roughly have a kind of income stream. But we also have something more akin to the creative industry, where it's project based. You're getting paid on at the end of 3 months, 4 months of work, and you're trying to do multiple jobs of that kind just to. So it's very lumpy rather than regular. So you're going to have to really try to design products around these two types of extremes. And one of the ways that we're looking at is one, you can from the EPF perspective, you can do voluntary contributions already, up to 60,000 ringgit a year. Don't ask me why the limit is there. It's actually related to the Money Laundering Act. We also have what we call the Aisaraan product, which has a matching grant from the government, and we're actively talking to a lot of platforms about auto enrollments too. So basically, you can register directly with EPF, and you'll have a voluntary contribution, not necessarily up to the same level as a formal salaried worker, but we do provide that avenue. Also, what we're going to be trying to do is recognizing that because EPF is a mandatory contribution fund, and once you put it in, it's kind of hard to get it out. We're actually looking at providing more flexibility to access savings for gig workers. Or for that matter, I think because the world of work is changing, this will be more just as relevant for the informal sector as well. So we recognize that that there is a lot of volatility in income. There is a lot of volatility in terms of needs. There is a requirement to have savings available for emergencies. So we're looking at doing a little bit more flexibility, and I can't disclose any details at this moment, but we are looking at really adjusting the EPF scheme to account for the rise of the gig economy. Also, something that we're exploring is the possibility of doing micro savings. So as you earn, you can save at the same time, rather than doing it on a lumpy basis or on a regular monthly basis or what have you. You can actually do it on a literally on a daily basis or on a per transaction basis. So these are some of the ways we're trying to respond to the changing circumstances of the Malaysian economy, as well as in terms of the gig economy. And I'm hopeful that more financial institutions will really try to address this area, because it's always been an issue, not necessarily with the rise of the gig economy itself, but with the informal sector as a whole. Going back many years, I mean, it's been very hard for somebody, for example, who's working as an event manager, for example, or in the creative industry to actually access bank products. And I think that the realization now is that you'd have to take a very different approach towards credit assessment going forward. And I think I'll end here. Thank you.
Thank you for that very detailed answer. And I think there's some important considerations over there. And I do hope that perhaps the limit of 60,000 could be something that can be relooked at, because 60,000 contribution per year
it's a constant
is probably
request,
not a lot in the grand scheme of things. Yeah, I'm sure I'm not the only person that has brought it up. And I think it's interesting to look at how we can actually push for this kind of voluntary contribution. Perhaps there could be even partnerships with gig platforms like Grab to actually push this kind of schemes out to their gig workers over there, right? But it also boils back down to a larger question on how we should regulate and categorize these workers, whether we should rethink whether we should rethink that classification of independent contractor or an employee. That's a much broader discussion that I think society as a whole needs to explore. So next, we move on to Sean to talk about whether or not the industry is doing enough to address the needs of these gig workers. And given that Grab has actually done quite a number of things, from micro investing to insurance for their Grab partners, I wonder if Sean, you can share whether that's a response to the inadequacies of the market or something else altogether. Sean, you have the floor.
Yeah, thanks, Vincent. I think my fellow panelists covered quite comprehensively the fact that there is a gap, right? So I just want to quickly share 2 points around basically who's the audience for this, right? Who do we really need to serve, and what the real gap is. So I think if you look at the gig economy, people typically associate it with like the rise of e-hailing, food delivery, some of them very visible sectors that have come up in recent years, right? But actually, if you take a look at the broader segment that I believe is underserved, it's the self-employed people in Malaysia, and they make up 1 in 5 income earners in Malaysia. So it is a very sizable group, right? And the gig economy essentially benefits from any innovations that get created for that self-employed group. Anything that gives people more flexibility and more sort of bite-sized investments, for example. So the 2 real issues I think were also covered quite well earlier. The first one is basically the recognition of income from the gig economy. Same as recognition of income from self-employment. It tends to be a little bit less recognized than the traditional fixed paychecks, which is a little bit ironic because actually, when you lend money to someone who works in the gig economy, if they couldn't pay it back last month, they could actually work harder this month to pay it back. So I think there's a little bit of a lack of understanding of the nature of the income. The second one is, of course, tailoring of the products. The biggest difference between the self-employed group, especially the gig economy, with the formal employed group, who get a steady paycheck, is that their income can suddenly spike, and then maybe during a month when they're not working as much and they need to take time off, the income can go down. So the expenses and the investments and the insurance, all the financial products that we design for them should match that flexibility, or it should be broken down into a bite-sized product for them to be able to consume and match their income levels. So we've created a whole bunch of financial products tailored at that, but we're really just getting started, and I won't go too much into detail. But that is really the crux of the issue.
Thank you for that, Sean. We do look forward to more details on some of the new initiatives that both you and Nurhisham mentioned earlier somewhere down the line. So my next question actually has been somewhat answered by all the panelists throughout the presentation, but I'm going to bring it up again in case you guys have anything to add in respect to this question on how, number one, specifically the system is failing gig workers, and 2, how we can specifically tailor more products. So, I mean, you guys have brought up some examples about the credit model. You've brought up some examples about recognizing the different demographics. But specifically, if you have anything to add, I welcome you to add some views on how we can better do that. The question is open to the floor. Would anyone like to take this? Yes, Farhan?
Vincent, probably I just want to
Sure.
add a few, I think, few points here regarding understanding the ecosystem and also the model. Since we have been dealing with the gig economy and also the gig economy platforms, sharing economy platforms, or freelance platforms since 2012, also 2015 up to 2020, we have seen variety and also and so in terms of the permutation of the model has been very fast changing. So I think just probably I will highlight three kind of reference for us, and also probably to the financial service providers out there, just to understand on the gig economy further. So the first point, I think, in terms of the traits of the gig workers, I think we can refer to the McKinsey Global Institute report, whereby they highlighted there are 4 types of gig workers in the economy. So the first one could be the free agents, whereby this guy, basically those who platform economy or the gig economy is their primary income, and they are working in this economy by choice. So, and McKinsey estimate about 30% of the gig workers are in this category. But then there's also another category of casual earners. Basically, they are working on the gig platform as to supplement their main income. So, and they prefer, and also they do this by their choice. The third category would be in terms of the provisionals, basically whom the platform economy or gig economy provides their primary income, but they actually would prefer not to do the gig economy jobs, or basically they prefer to do or prefer a traditional jobs. And they are the fourth category, basically the financially strapped, those who are supplementing their income by working on the gig economy platform just to make basically end meets, just to make to survive in the life. So, but they would prefer not to have to do those jobs. So there are 4 categories of traits of the gig workers. And then this is the first part of understanding the gig economy. The second part will be, you also must be clear in terms of, I think it has been highlighted before, the employer-employee relationship in this gig economy. So there have been no clear relationship. As an employee, you have the right, and you are probably, the employer have more control on you. But in terms of the freelancer, the gig worker, they have more flexibility. And also in terms of the income, for the employee, they have more stability. So again, these are the dilemma of the gig economy. As some of the workers might want to enjoy what have been benefited by the traditional employee, but then again, they are in this informal or currently recognized as self-employed people. So that's the second part in terms of the employee-employee relationship. And the third point I'd like to raise is in terms of the nature of jobs undertaken by the gig workers. So in terms of the financial products, we need to address a different, highly varied range of income earned by these gig workers. So just for example, in MDEC, we do categorize the type of tasks performed by the gig workers. The first category is in terms of the digital micro tasks. So they are gig worker or gig platform that provide income opportunities, by doing some jobs on digital platform, but they only earn just a few cents, per click. For example, like you are sharing something on your social media, and when people click, you get 50 cents. So that is one type of category. So they digital micro tasks. So they earn very less, but also the task is very simple and can be completed within few minutes. But there are also second type of task, we call it as digitally enabled task, whereby this is the largest segment. I think this model is the job itself is not a digital job. Driving as a e-hailing driver, sending parcels, doing cleaning, domestic jobs. So there are a lot of services, similar platform like Grab. So, but then different services offered market. So this is the largest segment, digitally enabled tasks. So they can earn quite well, but then again, it depends on the volume of the work that they've done. So it probably will be much better compared to the digital micro tasks. The second and the third category or type of task is what we call as professional job or digital work. So this is type of work like programming, coding, creative design, translation. So this is another gig kind of platform or work that probably, and also based on our data, they earn much better. So how do you design different products to this variety of income level, in terms of type of task, and also the nature, the traits of the people who join this gig economy? So yeah, so I think again, the financial service provider need to address and need to further understand of this ecosystem.
Thank you, Farhan. Very quickly, one of the audience was asking the name of the paper that you mentioned earlier.
Oh, so
they probably want to get a bit more details on.
Sure. So the first one, I think, just check on McKinsey Global Institute report. So it's quite recent on the gig economy.
Okay, thank you for that, Farhan.
Sure.
So now, back to our earlier question. Would anyone like to add before we move on to the next question? Audrey, Nurhisham, Sean. Yes, Audrey, go ahead. You have to.
Yeah.
We'll go Audrey, then Hisham.
Sorry,
Okay,
I just want to make a quick. Okay. A quick point. I mean, I echo everything that Farhan has already mentioned, but to add to that, I would say, you know, at UNCDF, we've been thinking, along with our partners, we've been thinking about how can we consolidate or create an employment history for a gig worker. And the specific type of gig worker I'm referring to is the gig worker that picks up a host of jobs across platforms, right? So I could be a Grab driver in the morning. I could do something like a Made Easy in the afternoon. And a person like this, if a person has to, demonstrate to a financial institution who they are in terms of the nature of their labor and the nature of their income, how are they going to do that? If you're a salaried worker, you have your pay slips, you have your statement of earnings, IT returns, and whatnot. If you're a self-employed person that's running a business, you probably have financial statements for your business. And I mean, there are exceptions, but the gig worker is sort of kind of in between. And the reality is there's a lot of data, right? These gig workers work on these different platforms. So there's a wealth of data to go around. So how do we marry the presence of all this data and the fact that the gig worker is picking up jobs everywhere? So probably this gig worker has a lot of income, is able to participate in the financial system in an engaged manner, but probably just can't show that. And so we've been thinking about how to create this employment history, but that brings up interesting questions about data stewardship, right? How do we cull the data? How do we store it? How do we use it? How do we share it? So these are questions that I guess we need to explore as an industry, but I just wanted to bring up the point about creating an employment history for gig workers.
I think that's definitely an interesting initiative that you're working on, but that's also contingent on the industry accepting these forms of data in the credit evaluation process, right? And I think it's helpful that a lot of regulators are looking at setting up digital banks for companies perhaps like Grab or Axiata to come in with new credit models for perhaps this new category of workers. I think Nurhisham, you wanted to add something, right?
No, just the very similar point. But I think what the key thing is that you have to look at a very, very different approach to credit risk assessment. It's not going to be because the thing is, you're not going to have to rely on, say, salary reports, whatever, but you do have to look at cash flow. And I think some of the more adventurous, I would say, financial companies, fintech companies out there, they're really looking at transactional data, and you're doing it on that basis. They're also recognizing that where the income sources are actually coming from. So I don't know whether you want to replicate the kind of really employment data and all that, because it might not be relevant at that point in time. What you really need to know at any given point is actually, okay, what kind of jobs is this person doing, and what kind of income are they earning at that given point in time, and you base your credit risk assessment based on that, rather than what he did 5 years ago, which might not be relevant anymore.
Thank you for that. And Sean, lastly, do you have anything to add to this question?
Yeah, earlier I just mentioned the two opportunities are recognition of the income, which I think Audrey actually covered really well. I couldn't have covered it that comprehensively. So I just wanted to give an example, I guess, of the second opportunity, which is when you think about flexibility of the products, right? To match the flexibility of the income. One very significant example for us is when you look at e-hailing insurance, and drivers needed to have insurance in place to be able to drive, right? The standard auto insurance products out there are all annual. So what happens is if you pay a lot of money upfront for an annual insurance, but you were just driving every weekend or maybe one day every 7 days, because as we've been shared, a lot of the people in the gig economy are actually doing this as supplementary income to boost their household income, right? What you end up doing is you pay for like an annual insurance just to drive one day a week. So this is a very classic problem, right? And we worked with BNM and also the insurance companies, and they were actually very, very open to that innovation and really thinking about the gig economy differently. So eventually what we did was we created a daily insurance product. So if you signed up for that insurance product to drive today, in fact, you don't even have to sign up, it's automatic. The moment you do a ride or you do your first job, your insurance kicks in and covers you for the full day, right? So those are the types of flexible products or bite-sized micro products that we actually need to look at creating as a financial industry, look at creating for the gig economy.
Thank you, Sean. And I think you touched on an important aspect of the financial product, because at the end of the day, there's a whole gamut of products that we need to have to be financially secure, ranging from savings, investments, and also insurance as well. While I still have you, there's a question from the audience over here who said that he's keen to kind of work with organizations like Grab. So perhaps there could be some synergy over there that you guys could work out. I encourage you to maybe try get in touch with us after this. So there's another question from the audience as well. So Annie is saying that some of these gig workers might not want to fully disclose their income to avoid tax. Is this something that in your observation is true? Any of the panelists would like to take this? Let me just pull out the question again.
Yeah, sure. My impression has been, and I think a lot of the surveys actually bear this out, most gig workers don't earn enough to pay tax anyway. So I don't see that as a big motivation, to be honest.
So then there is really no issue to do that, right? So I just want to quickly jump back into the conversation of insurance. How can the industry better design insurance products for these gig workers in cases of medical insurance, critical illness, or even some form of protection for them to when they're not able to do the daily job? Audrey, Farhan, do you guys have any insights on that in terms of the insurance side of things?
Yeah, I was just going to say that a lot of the panelists have mentioned this already. Bite-sized came up quite a bit, and on-demand insurance came up quite a bit. So at UNCDF, we're working with a few partners. Senang is one of them. And they offer, so Senang is basically an insurtech solution, and they source insurance products from different underwriters that make sense for gig workers. So we've already discussed a little bit about the nature of the gig economy, right? Like sometimes these gigs are so discrete that they're over very quickly. So how do you design insurance products for this kind of labor? So if you look at the insurance industry, the more traditional kind, you see very long-term insurance policies, and you see premiums that are mostly annual. And if you present that to the gig worker, it's not relevant to them, right? Their job is so different. They probably need products that are more on demand, that is commensurate with the kind of work they do. You see, the gig economy mostly is on demand, particularly the tech-driven gig economy. So your insurance products will also have to mirror the kind of labor that's being performed in the gig economy. So when you offer on-demand products, the price also kind of it reflects the on-demand nature, so it becomes more affordable. So Senang offers products that that are more like daily products. So you can pay a daily premium and access personal accident insurance today. Or you can get a product that covers you for a week because you probably feel like you're undertaking a particular gig that might pose a few risks. So you feel like you want to take insurance out. So the other thing with on-demand bite-sized products is that it gives you a lot of autonomy. It gives you flexibility. And we need to understand that gig workers are choosing the gig economy primarily for flexibility. So you can extrapolate and say they also need flexibility in financial products, right? So as long as, and I guess a lot of people have mentioned this already, these products need to echo flexibility. So I would say with respect to insurance, on-demand and options to make premiums more frequently, and that way the products become more affordable for gig workers.
Excellent. And does anyone have anything else to add on the insurance front of things?
Yes,
Farhan? Yes, go ahead, Farhan.
Just to add on, just to add on that point, I think probably just this is just throwing an idea because recently we have seen also there's one idea in terms of portable benefits. So basically, I think it's not new concept. In fact, the Social Security is probably an early example of this. But then again, we might want to explore in terms of the portable benefits. Basically, these benefits are connected to an individual rather than a particular employer. So basically, they can be taken from job to job without interruption in wage or loss or funding. So basically, the concept basically must be portable. They must be prorated, basically, and also universal, accessible by all workers, regardless of work arrangement that they've done. So yeah, this is probably quite a new idea in Malaysia, but then probably we need to start thinking something on a new concept of benefits and insurance coverage.
Thank you, Farhan. Now, before we move on to the next question, would anyone like to chime into this conversation? No? Okay. So I guess I just kind of want to take a step back and switch gears a little bit, right? And this is going to be quite a loaded question. So I'm thinking from a policy viewpoint, how should, what kind of changes does Malaysia need to make to better protect these workers? And I think policy is such a big word, right? You have policies from employment to banking regulations to a wide range of things, even how you regulate e-hailing. So I know it's a big question, but whichever angle that you see and whichever thing that you feel is most urgent, I would like to get the panelists to share. Maybe we can start with Audrey, then Nurhisham, then Sean, and Farhan, if you have anything to add later. Audrey, do you have anything to add to this?
Yeah, I agree with you. It's a loaded question. So, it's also a very broad question. And like you said, there's considerations as to employment, but also financial health. So I will focus more on the financial health aspect. I think one of the things, I can also give examples of platforms that are doing this already. One of the policies that, I don't know if this feeds into policy exactly, but it's a best practice, is to offer a suite of products. So Grab is already doing that, and maybe Sean can speak to it. We're working with another platform called GoGet, which is a smaller platform, is a partner of MDEC as well. And they realize that, gig workers have a lot of needs, and we've already discussed this, short-term savings, long-term savings, insurance, wage advances, affordable on-demand products. And it's important that all these products are offered to them in ways that are familiar to them. So if these products can be offered on the platforms that on the platforms where they pick up jobs, it would be great because it's more accessible to them. So I would say as a policy initiative, it would be good to explore partnership models, and we're already seeing that in Malaysia to some extent. I would say it would be really helpful for the gig worker at the last mile to access products. If platforms, financial institutions, and financial technology companies can work together, that's the first point. And the second point I want to make, very quickly, is is just tracking the gig economy. When we were doing our research for Malaysia, but also for other countries where we're exploring this topic, the data is hard to come by. When it comes to the gig economy, we mostly find estimations. And it's also hard to define the gig economy, right? Like there's the informal sector, there's independent work, there's freelancers. So we need a better way to track this sector to understand the different kinds of segments that operate, so that banks and policymakers and platforms and fintechs can tailor their products and services. So I think really tracking the economy and collecting the right kind of data is also important from a policy standpoint.
Thank you, Audrey. And Nurhisham, do you have anything to add from a policy viewpoint, changes that you think is required from the industry? Go ahead, you have the floor.
Okay, I'll echo what Audrey said just now. I fully agree. When you're looking at it from a public policy perspective, you're going to have to take a very similar approach to what the fintech industry will have to do. You have to offer a suite of products. The social protection system in Malaysia is heavily geared towards full-time employment, and a lot of the responsibility of providing for their future is actually on the shoulders of the workers themselves. So in that sense, I think we need to actually shift to a layered model where you have multiple forms of protection depending on what you're doing. Also, I think there has to be, a consensus that the public sector has to take on some of the burden, because the reality is that the individual cannot. So what you want to have is a minimum floor that's actually covered by the government, that has to be tax financed, and then you will have different levels of protection depending on which industry you're actually involved in. So best practice usually is that you will have a public sector floor, you will have industry level, you will have sector level protection, you will have individual company level protection, but obviously that's on formal employment. So that actually helps address not just the gig economy, but also the informal sector as a whole, because the circumstances are going to be radically different. And circumstances will change across life circumstances. So when you're looking at it from a public policy perspective, you have to be prepared not just for the economy of today, but also the economy that's going to happen 20 years from now. Given that technology is advancing and innovation is advancing at such a rapid pace, the structure of the economy could be radically different 20, 30 years down the road. And we have to be able to design a system that's robust enough to actually cater for that.
Thank you for that. And Sean, do you have anything to add from your end? I think also one quick one. And I think we could also gear your answer towards policy changes that could possibly address things like some of the gig economy workers not being able to get financial products like housing loan and whatnot. Sean, go ahead, you have the floor.
Yeah. So Vincent, your question was how do we make sure that we design policy to protect the gig economy workers, right? Before I address the how, just want to quickly touch on what are we protecting them from, right? And if you think about the income, based on UNCDF findings, right, the income is high for a lot of the participants. For 35% of them, they actually chose the gig economy because income was higher. On top of that, for almost half of them, actually, this income supplements their existing main income. So it is a boost to the income, right? And finally, the biggest thing that usually gets brought up when it comes to the gig economy is uncertainty of income. But our point of view is actually there's a very big gap between uncertainty and reliability, right? The income is uncertain from the perspective of if you didn't work as hard this month, you actually get less. Whereas if you're an employed person, if you slacked off this month, you will still get the same paycheck, right? But it's in many ways more reliable because you could just work harder to earn more, right? So, give you an example, like with the MCO, a lot of the incomes dropped because less people were going out. So less people were taking e-hailing, for example. But on the other hand, if you were running a nasi lemak stall, your income would have dropped to zero, right? In the e-hailing world, the income is more reliable in some ways because you can actually pivot to deliveries. Like, for example, all our drivers moved over to deliveries. So my point here is that we're actually the biggest threat to the gig economy workers is a threat against their income and the flexibility of the income. So if we actually said, for example, that if you're an e-hailing driver, you cannot do deliveries, then during the MCO, when 90% of the e-hailing jobs were gone, 100,000 drivers would have been out of income. But instead, these 100,000 drivers, because of the flexibility afforded by the policy at the time, were able to pivot over to deliveries. So that is the key thing we need to protect. So with that in mind, I guess quickly on how we can protect them, right? The first is to maintain flexibility of policy. So I gave a really good example from BNM. BNM has been very progressive. A lot of the regulations around deliveries have been very flexible and progressive. So flexibility is key. And the second one is regulations, right? I think it's very tempting to look at a new space that we may not fully understand yet and go, okay, there's uncertain income, let's protect them, let's regulate, right? Ironically, regulations actually are the biggest risk, I think, to removing some of these income opportunities. For example, during the e-hailing regulations that kicked in 2019, like 30 to 40% of the e-hailing drivers actually called it quits. Because bear in mind, a lot of them are part-timers anyway. So when you make them jump through too many hoops, it's no longer worth it. So yeah, really quickly, flexibility of policy as well as very light touch minimal regulations. And finally, Vincent just addressed your specific question around accessing loans, accessing financial products. I think if a financial product doesn't work for the industry and the industry comes up with suggestions, the best way to make sure that that access is created is to actually start from a blank slate. Basically say, if we need daily investment, micro investments, we need daily insurance, we need to change the revenue, the income recognition from a loan perspective. Are there any existing regulations at the moment that block this from happening? And if yes, then that needs to be removed. So from that perspective, the best instrument and tool to make this happen is something like a sandbox, which BNM has, a lot of our regulators have. I would say apply the same level of flexibility of these sandboxes to the gig economy.
Thank you for that. So what I'm sensing you're saying is that regulations need to be proportionate and also fluid to adapt to changes. And we all know we have a lot of changes in these past few months. It's been a bit crazy. Thank you for that, Sean. So let's move on to Farhan. Farhan, maybe you can share on some of the policy changes that you think need to take place. Also, maybe you can address one of the questions over here from the audience. With regards to skill development, reskilling, how can government agencies and policymakers contribute to this aspect of the gig workers' life? Farhan, you have the floor.
Okay, thank you, Vincent. So I think, first of all, I think regarding the regulations, I think, of course, as you mentioned earlier, this is huge questions in front of us. So the main key issues in terms of the act or the current regulation is in terms of the Employment Act itself. So where do we recognize these workers, these gig workers? Is it do we want to maintain them as an informal sectors, but then have a different benefit or different minimum social security and safety net, or we want to formalize this sector? So it's a truly holistic approach need to be done in terms of studies, in terms of understanding the economy. Of course, we can take a study in the US, how they define in terms of in California, CAB5. So they introduced that just to differentiate whether this worker is a gig worker or is an employee to the platform. So of course, Chile also has done a similar thing. So again, the question is back to the government whether we want to classify this as formal sectors or informal sectors. So it's a huge question in front of us. And the second one is regulation in terms of the sectoral regulation. So as highlighted by Sean just now, sectoral regulation, the e-hailing, I've mentioned earlier, we have more than 16 or 17 sectors under our purview. So we have seen in terms of the home sharing, for e-hailing, transportation, deliveries. So there's a lot more need to be done. And a lot of this regulation is still in gray area. So we are discussing an ongoing collaboration and also meeting with all the ministries and relevant agencies to ensure that the regulation is not something that will take down the income of the gig workers. So that is on the gig, basically on the regulation part. Answering the question on the skills development and reskilling, just to highlight that under our program, under MDEC, so directly we have e-Rezeki and also GLOW program. So for those who would like to become a gig workers, so we have a outreach training program under e-Rezeki. So basically you can register in erezeki.my. So we do provide profiling and also training. In fact, during this MCO and also during this PKPB, so we have online learning module just to assist in terms of people getting income from the gig platforms. For GLOW, for those who like to become a digital freelancers, so basically doing more high skill job, so you can participate in GLOW. So similar, go to erezeki.my/GLOW. You can register over there. We have, in fact, under the Penjana, we have a special training incentive for those who like to become a freelancers, a digital freelancers. So yes, on MDEC, and in fact, we have a few other program, a free training course for those who are unemployed. So you can go to mdec.my to get more information. Yep, that's from me.
Okay, thank you for that, Farhan. This is such a large topic, to be honest. There's so many different aspects of it to discuss that 1 hour actually hardly feels enough. But I guess there's only so much time we have in a day. We unfortunately have to wrap up with our last question. So maybe I'd like to invite the panelists to share their closing thoughts with the audience. Maybe we can continue with Farhan and just follow the same order again. Farhan, Audrey, Nurhisham, and then Sean. Farhan, very quickly, what is your closing thoughts that you would like to share with us?
Okay, so I think as simply as the gig economy, the sharing or freelance economy is here to stay. So in fact, based on our data in 2019 alone, the market size is more than 1.7 million ringgit. So 1.7 billion ringgit. So and more than 300 workers, gig workers have already earned income through the e-Rezeki and GLOW program. So yes, this has potential. This economy provide and can cushion the impact of COVID-19. Can also provide an alternative employment to workers, but there's a lot more need to be done in terms of understanding the whole ecosystem of the gig economy ecosystem.
Thank you, Farhan. Now I'd like to invite Audrey to share her closing thoughts. Audrey, go ahead.
Yes, I'm just going to basically echo what Farhan said. The gig economy is not going anywhere. It's the future of work. So there's no backpedaling. And I say that also because, there's demand on both sides of the divide. Gig workers want to participate in the gig economy, as we've seen, because it's flexible, but also customers like you and me want to access on-demand services. So it really is here to stay. And having said that, it's now up to the financial sector, policymakers, fintechs, the inclusive finance sector to adapt to the future of work, to make different rules for this particular segment, so that we can serve them better and ensure that they are financially.
Thank you, Audrey. Nurhisham, we'd like to invite you to share your closing thoughts.
Pretty much re-emphasize what Audrey and Farhan said. I think one thing, maybe the point that I really want to make is that unless you reinvent yourself, I think a lot of financial institutions are going to find themselves being left behind unless they really do pivot and adapt to the new realities. Because this, as the other two speakers said, this is here to stay. And you really need to understand the different characteristics of the gig economy. Because otherwise it's really a fight for relevance. It's also a fight for I think, really survival in this new world.
Thank you for that. And lastly, Sean, please go ahead. You have the floor.
Yeah, just really quickly, I mean, I think the most important thing that we need to all focus on is to continue to protect the income. And this income that's created through all the different gig economy and self-employed sectors really contributes to our household incomes and GDP. And the best way to do that is through innovation with like-minded partners. I mean, we have many partnerships with MDEC, with EPF, and now we're working with UNCDF. So I'm very encouraged by how all the different stakeholders and parties involved in the industry are coming together to try and innovate and make a difference.
Thank you, Sean. It's certainly encouraging to see various parties from the industry players to the government bodies to the regulators addressing this issue. While maybe the speed is not as fast as it needed to be, but progress is being made, and we do hope that progress will continue to be made. With that, it only leaves me the pleasure of thanking all our panelists for joining us today, and also our audience for tuning in. A quick reminder about the slides. It will be made available once the reports are officially published. We will be sharing it on our news site. We'll cover the story, and probably you'll be able to download it from UNCDF site as well. Audrey, do you want to share how they can download the report?
String of reports actually, and many PowerPoint decks. So it's kind of like a hub and spoke model. We'll share links with FinTech News Malaysia, so you can probably also access it from there. But if you go to uncdf.org, you will be able to access our publications there.
Great, thank you. So with that, we'll end the session, and thank you all for joining us. Take care now. Bye-bye.